All right, hey there, good afternoon, everybody, or good morning, I guess. Chris Franks with Texas West Capital. It's just a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 28th of February, 2023, coming at you live from just north of Houston, Texas on Lake Conroe. Good to have y'all checking in. Apologize for the issue this morning. Restream wasn't giving me the correct information that the software needed to stream, so I had to work through that. But hey man, let me take a moment here and remind y'all, if you haven't yet, go ahead and like the video. Go ahead and subscribe to the channel on whichever platform you may be watching from. Twitter, if you're watching from there, you don't have a subscription, but hey, follow me on Twitter there, TX West Capital, and then subscribe to the channel there on YouTube and Twitch. Good to see you guys checking in here, man. Got lots of stuff going on. Who's here already? Andrew Bennett, Name Mr. Wilkes, Fibble, Swanee is here, Bamboo, Silvio, Data, Pete, good to see you guys. Hey, listen, did you guys enjoy last Friday? We got a lot of good feedback from that. I think Fibble and I are probably going to make that like an every other week thing on Fridays, guys. What do you think about that? I can't even say it. I'm so excited. Just kind of tripping over my words here. Hopefully you guys are excited about that. But yeah, we'll do that. Also, maybe I'll get in here and invite other traders on here throughout the days. What do you guys think about that as well? Maybe, yes? Potentially? Brady, what's going on, man? You love these streams, man? I love you. Glad to have you here. Silvio, good to see you as well. You guys liked last Friday. What's going on, Dan? Good. Yeah, that's it's kind of feedback we've been getting. A lot of good stuff on that. I kind of stumbled over a few things, but, again, my first time actually hosting a guest on my show, even though I've been doing this for so long. So I appreciate you guys giving me a little leeway there on that. Eric, Quinn, you like that idea? Good. Andrew as well. HJ, what's going on, man? Good to see you here. Good. All right, well, great. Fantastic. Hey, listen, if you haven't joined us yet, you can do so at howtotradetowin.com/LMT. That'll get you in our mentor program. We see here, howtotradetowin.com/LMT. And I'm telling you what, guys, if you're serious about trading, honestly, I don't know of a better place for you to learn. I'm not just going to hand you something and say, okay, listen, when it does this, do that. This whole year, it's a year-long program. The whole thing about it is to get your mind right, because any monkey can learn to follow instructions, guys. But y'all aren't monkeys. You want to actually be successful. You want to understand, right? And that's what it's all about. Not just in understanding how and why price action moves the way it does, but also in understanding your emotions, your psychology, to be able to change that. Because often that's the part that holds you back. You guys go in and you pay all this money for all these different systems, and you come back and say, oh, they don't work. But really what it is you're not working. You are broken, right? And so that's what we work through every week with that program there, along with everything else. You can go here and check it out. But we'd love to have you there. Otherwise, you can join us, tiers 1, 2, and 3 there at howtotradetowin.com. That'll get you there as well. Absolutely would love to have you with us. I think it's an amazing thing, right? Andrew Bennett, what's up, man? Monkeys and bananas. Okay, I see that. All right, guys. Hey, listen, just a bit ago. So this week, today, I figured we mentioned the fact that Bitcoin is potentially going to close 2 green months in a row. All right? Now, the importance of this, I believe, or at least something worth watching, Hank may not necessarily agree with me, but is the fact that after every prolonged bear market that we've had, right, 2 green months in a row have indicated that the low is in, okay? So if we go all the way, this is the entirety of the 12, 13 years of Bitcoin's life here. All right, this is 1, 2, 3, 4, potentially 5 bear market pullbacks now, okay? And the shortest one was the first one here at 153 days. That was swing high to swing low. And then we had 2 green months, okay? We have it here for 426 days back in 2014 and 15. And then went up 1 green, and then it had 1 green and then a red month and a red month. And it looks like, let me see here, a red month. And then we had 2 green months. Then we pulled back red, then whatever. But it had marked, once we got these 2, that was it. It pulled back a little bit, sure, but the low was in. Again, here in 2018 going into 2019, so after 365 days of downtrend, We got a couple of months up. And then here, this was the June 2019 swing high to the March 2020 swing low, right? Again, 274 days, guys. And then boom, 2 green candles. Again, over here, potentially from where we're at here, 365 days. And then we had 1 red month, and then we have potentially 2 green months coming in. We had 1 green month, potentially another one. Now, we opened, this is the BLX here, so we opened at 23,135 and 82 cents. We need to close above that on the monthly here to give us those 2 green months, okay? There are 2 other points here, guys, at which point we had 2 green months as well in the bear trend, okay? We had it here in 2014, and we had it here in 2022. But in both cases, it was 3 to 5 months into the bear trend, into the bear market, that it happened, okay? So right here, 1, 2, 3, 4, 5, right? So 5 months down, 5 months in the bear market, and then we get the two green in a row, okay? Here, again, 1, 2, 3 off that swing high, and then we get the 2 green candles. We came down. So, if it bothers you that we're looking at 2 green candles in a row, because, hey, look, it did it here and it did it here, change your parameters. Be more specific. Every market, the shortest bear market was this one right here, right? At 153 days. So if we use that, at least we could say, well, every bear market that's lasted at least 153 days, when it's had 2 green months in a row after that 153 days, after 153 days, that's marked that the low is in. So, you can kind of look at it that way as well, right? Fibbo says, I tweeted out a timing chart video that could be a good complement to this timing chart. Oh, yeah, we'll have to check that out, man. For sure. But, so, Fibbo maybe, it looks like he maybe found a different way of looking at it. Similar outcome, but a little bit different way. But, yeah, it just happened to notice, there's been a lot of talk about the fact that there's 2 green months, and here we go, right? So does this guarantee that the bottom's in? No, nothing guarantees anything in trading, guys, okay? But this has happened every time we've had a bear market that's lasted at least 153 days. The minute, once it's been at least 153 days, that's marked the bottom basically after that when you've got the 2 green candles, right? So at least 153 days, maybe it goes longer, but once after that 153 days, when you have 2 green months in a row, that usually indicates that the bottom's in. So it's done it there. We'll see if we get there. But we still have to even close. Guys, we still got, 6.5 hours till the end of the trading day, the end of the trading month, the end of February. We still have to close above that open. Anything can happen. We have a crazy day where things just drop and ends up being just 1 green candle, right? But if it does close as 2, then historically, every single time we've had these conditions, these variables all met, right? That's what it's meant. So we'll see what goes on with that. Crypto MTNS, what's up, man? Good to see you checking in. So anyway, I thought that was something interesting to share. Again, my thoughts about the bottom and what I've been looking at in ways to be signaling that, that it's probably in. But this is just another thing kind of looking at going, wow, okay, well, maybe, right? So we'll see what goes on there, but I'm definitely watching this myself. As it does that, right? Interesting. Here's something interesting else we can know, guys. Look at this. So this one's a little bit harder to tell here, but if we look at the 2015 bear market low there, if we look at the 2018 bear market low, 2019 or 20 here, I'm sorry, and then the recent one, right, where these 2 white candles, these 2, they're green candles, right, have come up, have been right into the local resistance off the swing low. So you had the bear market low, rallied into, created resistance, pulled back, and then your 2 candles into that resistance, right? Here, again, you had your low, you pulled your 2 candles up into this resistance, right? Before it broke out. Here, again, you've got your resistance up here. You pull down 2 candles into the resistance, right? Here again, you get your low, you're getting potentially 2 candles up into your resistance. So, again, it's not that there's anything. See, this is the thing. A lot of people will come and they'll tell you these things, guys, and they'll say, oh, well, look, this happened, so that has to be it. But there's never really any explanation of why. And that's, I think, where we really stand out at TWC, is because I tend to spend a lot of time trying to explain to you guys why it's happening. So it's not that you're just looking for these things to happen, but you understand why they're happening. Because if you understand why they're happening, then you can prepare for them as other things happen, right? You can potentially see them setting up. You know how to act or react based on, the reasons of why it's happening. And so, usually when you have these resistances like this, you're going to rally up into the resistance and pull back a bit and then break out, right? And that's kind of what we're seeing here. In this one right here, and then that one kind of broke out right away. This one kind of hit it, went sideways, pulled back just a tad bit off that high there, and then broke out, right? Again here, potentially pulling back a little bit here before getting that fuller breakout. All it is, guys, is you don't normally expect price to break out through resistance the first time around. So if you've got 2 green months leading up into that resistance, off the low, right? That usually signals, okay, momentum and everything is extended, right? It's getting tired. So you usually need a little bit of a pullback before you break out. Usually. Now, not all the time. Sometimes, you get a pretty good breakout like what we had here. We didn't have much of a little pullback right there, in that second month before it made that second month high, and then it just kind of busted out, went flying up. But, that's usually what's happening at these areas, right? You get all this momentum build up, it gets overstretched here. And then you have to kind of pull back and take a breather, grab a little bit more power to help you through it, and then boom, you pop through it and take on off, right? So kind of interesting, the way it looks. I mean, like I said, there's a lot of comparisons in here and in here, right? If we were to take, basically, let me see here. Whoops, the wrong one there. There we go. So if we were to look at something like this, right? And then we were to go over here and go, well, okay. Let's see here. There we go. Something like that, right? So what you're looking at, again, you've got your same kind of sideways there, right around the same way, right? It's just this one had the one dip down and then the low found support around it and rallied up, right? In this one, it was this move here, this prolonged move back up instead of a quick zip back up. Prolonged move up, a little bit slightly higher high. But it's the same idea. You pull down into support, bounce 2 months, and then broke down. Right here, right? You have your low, you rally up, you come down, you find support at support, bounce up for 2 months, and then you break down. The same idea we look at when we look for the breakout higher, right? And so within that, then we have this one, right? When we break down, we then have this little bounce up for a month and then down, right? Same kind of idea here. We break down, we get this bounce up, and then we head down further. And then here we come with this. So does this mean that we have something like this? Is this such a terrible thing if we did? I don't think it'd be such a terrible thing, but this is a little bit different, of course, because this was not 2 green months in a row off the swing low, which this may be, right? But just as this area is the same idea, right? It's the drop it creates support, rallies up, you hit support, bounce, and then you break down, right? It's the same thing happening here. It's just done a little bit differently, right? This is straight down, straight back up and back down, lower high. This here is down, takes some time to get up, breaks a new high, slightly new high, and then comes down, right? So the same concept, the same thing is happening here. It's just the way it gets there is a little bit different. Same thing could be said for what's going on at the low here. You're getting the rally up into resistance. Right? And so we could be at this point. So, we could just pull back a bit and then break out higher, or we could do like 2019 here and just kind of take on up toward this resistance, which is that R1 kind of pivot area on the monthly, weekly area. So don't get caught up. I know a lot of times you guys get in there and you get really caught up in, it looked exactly like this. That's the big downfall of a lot of these accounts on here that are talking about Wyckoff and say give you one of these schematics, right? and there's no volume on the schematic because they don't realize, they don't recognize that the schematic is just there to give you an idealized price action chart, but it's idealized and it's really just there so they can explain what's going on in the phases and the points in there. You're selling climax, you're buying climax, stuff like that. It's not in any way meant that this is what it's going to look like, but people that don't know, they're just going to put the schematic up there and go, oh, look, Wyckoff. Yeah, I said it like that. Listen, guys, I don't care how somebody trades or if they're good at trading some other way. If that's what they're doing and they're telling you they've got some Wyckoff analysis and they're putting up a schematic, first of all, just run. If they're using the schematic, that means they haven't studied Wyckoff at all. And they're just putting it up there because Wyckoff's the cool thing now, right? If you're putting up a schematic, you have not studied Wyckoff. You don't understand what you're talking about, right? And you're going to see that those people generally have no volume on their charts. They have no talk about volume. What they're trying to do is say, look, it looks like this chart. Well, that's the same. And so, naturally, that's what people tend to do, right? And so often when we're looking at these analogs, right, traders that don't understand how to look at analogs, right, they're going to look for the exact same movement. But it's not about the exact same movement. It's about similarities within areas of that movement, right? And that's what it's about. So don't expect that this is going to look like this or that it's going to look like this. It doesn't have to look like either. What we're looking for, what are happening, what's that price action doing overall? What is it doing overall, right? Again, it's that drop down, that rally up into resistance. It creates the resistance, drops down low, rallies up into resistance, right? That's what we're looking at. Let me see here. Misspelling intentional. Oh, Wyckoff. Anarchy, what's up? Good to see you. You like the timing here, Fibbo, that is showing on here? Yeah. Again, I've looked at, guys, I've shown you different ways of looking at the chart and things that we've looked at as potential indicators that maybe a bottom's in or whatnot. Or maybe, a low is in, or maybe, we've got a accumulation happening, all these different things, right? Analogs and stuff like that. This is just another way to kind of look at it. I think it definitely bears watching though. Again, because, if you take the period of time, at least 153 days, after that, the first, when you finally have 2 green months, it usually indicates that the low is in, and it's happened every single time. Now, just because it's happened before doesn't mean it has to happen again. Please understand that, guys. There are no guarantees in trading. Past performance is not indicative of future performance. Blah, blah, blah. All the same stuff, right? But what we tend to do as traders is we tend to look and pay attention to what's happened if it continues to happen over and over again. And it has happened every single time that these particular set of variables have occurred, right? Every single time. And that's been 1, 2, 3, 4, potentially a 5th time. Like I said, we still have to have February close green. Okay? So it bears watching. It should bear watching, right? Let me see here. Let's see here. Silvio says, normally the Dixie, the DXY, if it goes down or up, Bitcoin does the contrary, but the last 2 weeks does equal, so the same movement down the road. Yeah, but again, Bitcoin is not moving relative to the dollar or relative to DXY. Stocks don't move relative or whatever to the DXY, right? They're all separate markets, okay? And they all have to do with the market's analysis of risk at that time. And each market is different, though. Usually, Bitcoin will signal, it's like a canary in a coal mine. It'll let you know what's going on with general ideas of risk in the market. If the dollar's dropping, then generally we expect the markets to be risk off. If the dollar's rallying, then generally we expect markets to be risk on. Now, does it happen at the exact same moment? No, it takes time, right? It takes time for, money flows and decisions to be made and stuff like that. But that's why I always warn you guys, don't think that just because the DXY is doing one thing, that Bitcoin or stocks are going to do the opposite at exactly the same time. It doesn't work like that. It just, if you see that happening with the dollar, then understand, like where you see the dollars maybe has rallied for a bit and then starting to pull back, but maybe, stocks or something, right, are still kind of coming down even though the dollar's pulling back. Well, it's going to take a bit for the stocks to flip and turn around, right? Or maybe that isn't exactly the highest point of the dollar. Maybe it will rally higher. It's an interim pullback maybe. So there are reasons for that, right? So just keep that in mind. Kimasabi says, I find that Wyckoff volume works better on the 1 hour and lower on Bitcoin. Daily volume is likely over the counter. It doesn't always look right as per Wyckoff. Sure it does. Sure it does. Yeah, it works just fine, all time frames. Daily volume is likely OTC. No, because OTC doesn't show up in your charts. Over the counter has, when you're selling Bitcoin over the counter like that, it doesn't show up in your charts. It does not affect price action directly. It will not show up as volume being transferred directly because it's not in the exchange. It's not happening on the exchange. Does that make sense? So yeah, so it won't even show up on there. Now, can it have an effect overall, as time moves on a bit? Sure. But you're not going to see any Bitcoin that's sold or exchanged off of an exchange is not going to show up in your volumes or your price action or anything on there. Because it's not sold on the exchange. It can't be incorporated into the exchange's numbers, right? So yeah, but Wyckoff works perfectly well on all of them, guys, okay? Let me see here. What other charts I got here for you guys? See here, locally Bitcoin. It looks like maybe we've got a 1-2 here. If so, this gives us a minimum expected wave 3 target up here around $25,007 on Coinbase. Secondary target could potentially be at $25,455 and a quarter. But ultimately, again, guys, all we're looking at here, let me kind of zoom this out a bit here. Look at the same. Now this is the last day of the month. So these daily pivots here will change after 6 p.m. tonight. Okay, 6 p.m. Central Standard Time. Okay, after midnight UTC, these will change. Okay, but again, we're looking at this kind of idea, and so the thought in general is that if we get an impulsive breakout above the weekly pivot, so talking about spike of volume, larger candle spread type thing, right? Then ultimately we should kind of rally up some, probably right into this resistance here, 31,000. Pull back to the pivot as support and rally up to the R1 pivot around 40,000. And then that should give us 5 waves up off the bottom. Then we'll get 3 waves back toward the pivot here. Then we'll go up. Generally, that's what we expect. For the daily, I mean, it's like this, right? It's like this. You rally up for it, you pull back, you rally up toward that R1 pivot, right? But again, this is going to change. So we're going to have to see where these new pivots fall. I think because of all this overlap here, we'll probably get the pivot up a little bit higher, maybe the R1 a little bit lower. And then we'll see how this, continues to play out here. But at the end of the day, we are right here at the swing higher, right? We kind of peaked out above it. And so you have these large candles coming down. This is inefficiency. You see how there's no real volume over here on the VPVR, right? Usually this acts as a magnet and draws price up into the higher volume node. So if we can get a break, if we're going from here and we break out above this, I mean, my initial thought is that we're probably going to rally up into this, 30,000 area. That seems to make the most sense. Again, just based on structure here and what's going on. Now, again, if we zoom out here to the weekly, right? Remember the weekly time frame says, low, high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? We've inched out, we've peaked out above this last lower high of this downward bearish market structure here, right? So it's right here at, let me see here. There we go. 25,214 and 57 cents. I've been talking about that for months since we were down here, right? Since we were all the way down here. We've peaked out above it. We've hit that, oops, you guys dug it. There we go. 25,288 and 88 cents. We've broken that. We have peaked out above that. That means this market structure is broken, this bearish market structure. Now, I can appreciate some of you guys maybe want to close above it or something like that. It doesn't matter what you want. It's like saying Elliott wave, right? It's like saying, well, I've got this, it's like saying, okay, well, I've got a 1 and a 2 Let me see here. Yeah, I've got a 1 and I've got a 2 here. And we just kind of wicked right below wave 1 and came back up. So I don't think that it broke it. So we're still going to look at this as a 1, 2. You can't do it. The rules say you can't even peek down below that, right? That is the same thing that we're talking about here with the market structure. Market structure says if you break that, this was the last lower high coming off this. If you go just 1 penny above that, you have broken out above that last lower high. So technically, this bearish market structure has now been violated. And we have a high, a low, higher high, low, higher low, higher high coming off. We've got this bullish market structure coming off low here, okay? Now, that doesn't mean you can't like get up here and then fall down and make a new low, but that changes it. That's a new bearish market structure, which is a high, a low. It'd be a lower high, and if you got, once you got that lower low, and then you'd have that lower low. But that's an entirely different market structure than this right here. It doesn't matter what you want or what you think. Technically, it's broken on that, right? Again, the best way I can use to compare that is to Elliott wave, which says, oh, well, we just had a wick down a penny below wave 1, but it closed back up on wave 2. So I think wave 2 is still that. No, it's not. Once you break down below wave 1, that's it. It's not wave 1 and 2 anymore, right? Same idea here. So that's what we're kind of looking at, when we look at that, what we got there. By the way, notice the big old wedge that we popped out of as well, right? And we looked at so many things, we looked at the dragon pattern, right? I mean, so many different ways that you could look at this here that gave you all this movement up while people are out there still screaming that the bottom still needs to come, that the lows are not in, and that whatever, right? Meanwhile, they've missed all the profit, all this profit coming up off here, right? And furthermore, if they're wrong and the bottom is in and they've been holding short, they just lost a lot of their profit they've been holding short as this continues to rally up higher. You cannot be emotional when you trade, folks, okay? You cannot be emotional when you trade. It will lose you money left and right. If you think that price has to go down lower, that's great. What's your invalidation level? And I'll tell you what, if you tell me your invalidation level is $40,000 up here and you're not longing, get out, stop trading. There's no reason for you to be trading because you're purposely leaving like so much money on the table. It makes no sense, right? It doesn't make sense. Why, you go, okay, well, if it breaks out above 42,000, then okay, the bottom's in. You just missed a run from 15,000 to 42,000, almost 200%. Are you kidding me? We all got to do what we got to do, but man, oh man, guys, if that's your thing, I'm going to tell you right now, you're going to have a real hard time getting to where you want to get in terms of profitability and wealth and whatnot as a trader. Okay? Even as an investor, if you're not going to enter long until it gets to 42,000 as an investor, what are you thinking? I've shown you on a weekly. I mean, even on a weekly, you've broken that bearish market structure. Right there on a weekly is your key to, okay, let's look for an entry now. You know what I mean? You guys got it. You got to be careful about that. I don't want you guys getting caught up in that thing where you're going to wait till price is like mooning before you actually jump into it. But that's what mostly happens with retail traders, right? They get in at the tops. They get out at the bottoms, right? Unfortunately. I'm trying to do what I can to help you guys understand this. Not to tell you when to enter or exit, right? Not to convince you that I'm right, but just to give you things that you need to be thinking about as you're trading, as you're trying to decide, okay, what's maybe going on? Where should I be looking? But the one thing's going to help you more than anything is going to be risk management, proper risk management. If you have that, then a loss is just a tiny little loss, and it's no big deal, and it takes a lot of the emotion out of your trading. It's when you have a lot on the line that your emotions get involved, okay? When it's going to be a big hit to your portfolio if you take a loss there, right? Does that make sense? I disagree. In 2021, it didn't have reaccumulation volume. Kemosabe, I disagree. See, this is the thing. Wyckofian analysis isn't something you guys learn overnight or in a few days or usually even in a few months. You know, it often takes years of consistently looking at the market and understanding to recognize all the little nuances going in there. Generally, reaccumulation or accumulation is going to have decreasing volume throughout the range, and distribution or redistribution is going to have spikes that continue all out throughout the range. Generally. That's not an every time thing. Sometimes it looks like that volume looks like distribution, but it's actually accumulation. But that just takes, again, that takes practice of looking at it and getting to understand it over the course often of years, that you really kind of get to that point where it becomes much more comfortable. I make no mistake about it, guys. I've told you guys that one of the biggest things for me when I was learning Wyckoff was understanding those nuances in volume and price action. And some of it wouldn't click. It took months and months and months and months and months before it finally, and one day I just woke up and it was like all of a sudden in my head, I'm like, oh, okay. It wasn't like anything I was thinking on it, and it kind of worked itself out. It was like all of a sudden I woke up one day and it made sense. Prior to that, it was like, what the heck? Why is this looks like this, but it's acting this way? But that was, again, my personal experience there, It wasn't something that I just learned in 3 months or something. Nothing of what I've learned as a trader did I learn in just a few months, guys. I want you to understand that. If you're coming into trading and you think that you should be able to learn these different things that people teach, like in a month or a day, oh my God, heaven forbid a day. But or even in a year, you're probably going to get really disillusioned with trading. And you're going to continue to blame it on everybody else, Wall Street and crypto whales and all this other nonsense, because you haven't really understood yet. You haven't got to that point where you understand yet. Trading, guys, is a skill. It takes time. You can understand the basics in a few months, maybe, depending on what you're learning. But it takes application of those, correctly practicing those basics over and over and over again before you get good at them, right? Again, guys, it's the same way as if you're trying to play a sport or trying to play a musical instrument or trying to learn to be artistic, painting, stuff like that, right? It takes time to develop the skill. Sometimes you guys come at me and you're like, oh, well, I've been trading for 4 years. Well, have you been consistently profitable in those 4 years? Well, no. So you're still losing money? Yeah. Well, okay. So you haven't even gotten to that point yet where you're consistently profitable. You're still basically a newcomer. No, I've been doing it for 4 years. Well, I get that. You've been in the market, giving the market money for 4 years, but you haven't learned what it takes to be consistently profitable yet. And that's a big thing. That's a big ego thing. It's hard for people to often accept that. It's tough. It's tough for you to sit back and go, okay, yeah, I've been doing this for 4 years. I've lost a lot of money doing it, but I'm still really a beginner. I still haven't figured it out yet. And that's tough. And egos, guys, egos are huge. Egos seem to be even larger here because of social media. Don't let your ego get in the way of your learning, okay? I still learn today. 27 years of doing this? Going on 28. I still learn today. I never stop learning. There's always something more you can learn. Not just in trading, but in everything in life, guys. The minute you start thinking you know it all, in a certain subject matter, is the moment you start falling behind. You'll never know it all, guys. You'll never know it all. I don't care how smart you are. You'll never know it all in any particular subject. Okay? Fibbo says, took him years. Swallowing the pride is tough. It is so tough, right? It is, guys. And I bring that up because I know some of y'all are struggling with that. Again, you talk to me. I've seen posts online, stuff like that, right? But I'm trying to let you know that it's okay to step back and go, listen, I don't know what I'm doing yet. Yeah, it sucks. 4 years. It sucks. 4 years of continuing giving money market. It sucks. I get that. But it's not going to get any better if you continue to lie to yourself, and pride and all this continues to keep you from learning. You're not going to get any better. You're going to continue to do what you've done for the last 4 years. And what is it that was said? Doing the same thing over and over again, but expecting a different result. right? What is that? The definition of? Insane, right? Insanity. Crazy, right? It's true, guys. It's true. You have to, and I don't know of anything that requires you to be humble more than trading. You know, and to be able to recognize that maybe you really don't know what you think you know. It's tough. It's tough for people, right? But like Fiboswani says, if you stick with it and you do it correctly, you have to do it correctly. You can't just stick with the nonsense that you've stuck with that's kept you doing the same crud that you've done over and over, right? But if you learn the right way to do things and you apply them properly and consistently and you focus on them, you have that discipline, right? Those are the concepts, guys. Discipline, consistency, and focus. Those are the requirements to be a successful, hiccups there. To be a successful trader over time, okay? Not going to get rich overnight, guys. It's like the lottery, right? Everybody wants to win the lottery, but the studies show that almost everybody that wins the lottery, 10 million, 30 million, 50 million, whatever, within like 3 to 5 years, they're as broke as they were prior to winning the lottery. It's the same thing in trading, guys. Same thing in gambling, even. Why do you think when you're doing well at a casino, they comp you a room, a nice pretty room, free drinks, show tickets, whatever? Why? Because they know that if you're doing well, almost all the time it's just luck. And because of that, they know that if they can keep you there continuing to do it, you're going to give it all back. And they're right. That's how they make so much money. The house always wins, right? Now, thankfully, trading isn't gambling, or it shouldn't be. You can treat it as such, and you're going to lose your money the same way. But, you know, trading can be quite lucrative. But it is a skill, and a skill takes time to develop. I can't say that enough, guys. I cannot get this idea of getting rich quick out of your head. I can't get that out of your head quick enough. Okay? It should all be under the umbrella of life management because it is all risk, Fiboswani says. Yes, exactly. Yes, Kimasabi, yes, insanity is doing the same thing over and over and over again, expecting a different outcome. Yeah, but we do it, right? We're humans. We do it. Emotions, right? Ego. All this stuff keeps us from being, not just in trading, guys, but in life. It keeps us from getting where we want to go. You've got to acknowledge it and understand it and recognize it and then be serious about changing it. That's right. You got to take profit consistently and keep the stop loss where it belongs. Discipline. That's right. That's right. That's right. All right. So here we go with Bitcoin here, right? What other chart do I have you here? Oh, well, we can look at, these were some interesting charts, right? So this was, this is the BLX here with this regular pitchfork on here. And you can see that we broke out, came back and retested as support, the outer tine here of the pitchfork. Most often, this indicates we're going to rally up. If we've broken out, think of the pitchfork like a channel. We've broken out through the channel, retested that channel resistance as support. Rallying up here, right? And if we look here with Ethereum, right? Same idea, guys. Except it had a bit more back and forth above this, right? Staying below this I think it's the 25, it's 50%, I think, right there. But then we got the big impulsive breakout above it. But the next one came back to test the next one here, rallied up sideways here, looking like it wants to take out and go out. On the ascending pitchfork, that's the good one here. Look at this. So we come from the swing low here in the bear market of 18 up to the June 19 down to the March 2020, right? Gives us this pitchfork. We had some deviation here outside the pitchfork, right? Came back in all the way down to the bottom of the pitchfork, and here we go bouncing off it. Trying to head up here, right? So, I mean, it's doing real well with the pitchfork here on this ascending move up. You know, Ethereum is here, right? So, yeah, so we'll see if we can get some, again, you know, really, you know, at the end of the day, you see this right here? I mean, right here where this weekly, monthly pivot is, right here. That's the key area, guys. Do you see why that's the key area? Let me kind of do this here. A little bit easier to see there. look at this. Resistance back here in 21, right? Support, support even though it wicked down. The candle spreads found support again, support. Support, resistance, resistance. I mean, this is the level here. It's that weekly pivot. It's the same thing I talk about on the Bitcoin and everything else, right? It's that weekly pivot. If you can get an impulsive breakout above it and close above it, that should indicate that the bottom's in way over here, right? And we're rallying up now. The other way to look at that right there is this one, which shows kind of the same thing here. It's just basically, it's you know, a ascending or a barrier triangle here. The idea that we may bang into the pivot, pull back towards support, and then break out. We don't have to. I mean, we can just break straight out here. But if we run into this resistance area here and we pull back, the odds are we're going to pull back kind of like right around this 1500 level, 1600 level. And then we should break out hard. And so based on the height of this, that would give us a target then up there of about $4,550.50, right? But I've got multiple take profits here along the way, right? The green range right prior to the R1 pivot on the weekly, the 37.75. And then you can notice this one actually hits the third take profit up here, right around the all-time high. Does that bug you guys that I talk about all-time highs or whatever when you're still kind of not sure that the bottom's in? It bugs a lot of people. But, you know, we're going to be realistic about it here. There's a potential pattern setting up, potential. Again, we would need a rejection here around the pivot, and then we'd need to see a pullback probably around 1600, and then we'd look for that breakout, right? But, again, we could just bank on right through it, just barrel right on through it up toward that R1 pivot and then pull back and then kind of break out higher. Okay? So we'll see what happens. We'll see which way it plays out. Importantly, we've broken out of this, however long this period is here, 280, almost a year-long downtrend here, this resistance. We've broken out of that on high volume, right? And large candle spread. Large candle, spike of volume coming up comparatively, right? So that's important. That should have us looking up toward a test of this area up here, which, again, would potentially set up this barrier triangle here, right? No bugging here. That's what stops are for, Fibbo says. Yeah, exactly. So, you know, Ethereum still looking good as well, right, overall. Even if it pulls back, it's still within this ascending support here, right? Now, remember, traders, we always talk about one point that's just a point, right? 2 points is a line, right? 3 points is a trend, okay? What that means is you usually want to see 3 attempts, 3 touches of something, and then the breakout, and that'll usually indicate that that's something that you're trying to break out is significant. Doesn't mean it can't break out on 2 touches, but it just means once you have 3 or more touches to it, if you're breaking through it, it's usually significant. Okay? Let me see here. What else we got going on here? DXY breaking down. It hit my EQ here, right? Now, there's a couple of different counts I'm looking at here, but right now, what I'm really interested in is we did break out through the weekly pivot, but we got rejected at this, I think is it daily? Yes, this daily supply structure here. Right at the EQ, guys. Right at the equilibrium. And then, yesterday, we almost printed a bearish engulfing candle. Now, again, most often when you have a trend and at what appears to be the top of the trend, you get a big reversal the other way that's more than 50% of that previous candle. Usually, that's indicative of a reversal. You got basically these tweezer tops up here. You got the big, you almost, that big surge the day prior almost took it all back the next day. Now, of course, we've got a doji here because we've just got support. Look where we're at, guys. Where we're at right here. So we're going to see if we can get some follow through lower now. That's what we have to see if we can get here. If I look at this is just 1, 2, looks like 3 waves down. Let's get zoom into 1 hour here. Actually, looking at the 1 hour, this looks kind of interesting. It could be 1, 2, 3, A, B, C is 4. 1, 2, 3, 4, 5. So it could be 5 down when we zoom into the 1 hour. On the larger time frames, it doesn't look like quite that. So what I want to see is, I want to, you know, if this is 1 down here, then wave 2 usually targets wave 4 the lesser degree. So that would be this area right here. So I could see this rallying back up, right? This could be like an A, a B, and a C, right up into this area. But I want to see a rejection in this area, preferably. If it doesn't get rejected, it doesn't mean it's not 5 waves down, but just usually, you know, if you can get that rejection at that wave 4 area, you know, that makes it a quick, okay, well, there's 1, there's 2, and we're going for 3 now, right? So while this overall continues to remain as resistance here, I want to look lower down. Locally, I want to see if we can get a rejection right in this area. If not, we're probably headed up here to around 105.1 or 105.11 area right here. If we break out above here, we should just zoom right through this inefficiency right here. If we break down below the swing low here, that'll indicate, okay, I believe we're headed down. And, you know, again, that's where we'd be headed, right? Yeah, but like I said, I mean, potentially, potentially could be, or maybe we can even get 5 down, you know, a drop down here toward the S1 pivot. You have S5, and then we'll get 1 up here, and then we'll get down. But overall, it looks like that top may finally be in on that. Let me see here. John D, what's up? Says, what do you think of that NASDAQ monthly candle? You talking about the NASDAQ? I don't know. I haven't looked at. I think I looked at the S&P. Let me see here. Let me see if I can find you one here. Let's just do it this way. All right. We can just look right here at the E-minis. It's pretty similar. You said which one? The monthly candle? Monthly. That right there? I mean, there's no surprise. If you look at where this rejection all is coming here, it's right here we had rejection and support. Same area. This rally right into resistance right here. So, I mean, it's not surprising where it's finding the support, where it's finding the resistance. 2 things could be happening. One is, could be a top and head lower. The other one is, could just have cleared the way, and we see some rallying back up and following up. I think the monthly by itself doesn't give us a lot of context. Let's zoom out a little bit. Let's zoom in a little bit here. If I look here, 1, 2, 3, 4, 5. So 1, 2. Man, this might not even be 1, 2 here. I mean, this is just A, B, C. This is just 3 waves down right now. See, so if we break out above this right here at 12,792 and 75 cents, this is going to be 3 waves down. That's corrective, which means minimally we should be looking up here around 13,570 and a quarter. Which happens to be previous area resistance here, right? And so if this is, say this is a 1, 2 here, right? Wave 3 is expected to be 13,748. If this breaks up here, we're just above that. 13,570. So it gives us confluence in that wave 1, 2, 3 target area. Fibble, have a great day, bud. So yeah, you see what I'm talking about here? The monthly doesn't really tell you how much, other than, okay, it's expected where we're finding resistance at the top and at the bottom and the top there, right? But if we zoom in just to the weekly here, all of a sudden we've got 5 waves here, a pullback, and we've got potentially 1, 2, 3, 4, 5, right? Potentially. Or maybe this is even 1, 2 here and heading up, in which case our target's going to be even higher, right? If this is like a 1, 2, 1, 2, right? Then we pull back almost 50%. It makes sense, right? So in that case, we'd be looking not just for 13,570.25 there. We'd actually be looking for something closer to 15,524 for, 1, 2, 3. Wave 5 around 16,373. So even if we just hit that, all of a sudden, this 1, 2, this gives us an overextended 3, which reaches 300%. Very bullish wave 3 on the rake, right? And that gets us, of course, then up here near, look at exactly where this is, guys. Just kind of draw this here. Right about that area right there. See, whether it's wave 5 of that interior set or it would be the wave 3 of this larger set, it's right here. The only time we went above here was this close here, which immediately bearish engulfing closed back down. Wicks. That's a significant area. Yeah, man, definitely. I'm not a big fan of just looking at, large time frame candles because there's so much information we might be missing in there, right? Even with what I showed there on, say on Bitcoin earlier, the 2 green months idea. With that, that's the idea that you've got 2 consecutive green months and you could do it. But even within that, I've been talking to you guys for months and months and months, since June of last year about a potential bottom forming and how that would be and explaining it to you, right? So, yeah, you got to zoom in and check it out and see what's going on. It doesn't guarantee we're going to do that. Obviously, if we drop down below, if we drop down below here, well, now we've got 1, 2, 3, 4. We get a 5th wave, right? Which means it could just be an A, a B, and a C, but it also means it could be a 1, 2, 3, 4, 5 heading down lower. But if we can break from here, if we don't drop below this swing low and we just break out above this one, then either it's A, B, C done and we're heading up, or if this is wave 4, if this is maybe 1, 2, 3, 4, we could get a triangle. Or if this is wave 4 or wave 2, we can get a flat, ABC down, ABC up, and then 5 more down. Drives traders crazy. It just continues to go sideways, right? But again, even in here, notice we rallied up into resistance at the pivot, right? This is where this resistance is right here, right? And then we've pulled back. All we've done is pull back to support. That's all we've done so far. Doesn't mean it can't fall further, but for now, we hit resistance, pulled back into support. Let's kind of see if we get a rallying breakout. I wouldn't be trading off that monthly candle. Yeah. Does that make sense? Let me see here. Diego, what's up, buddy? Appreciate you, man. Crypto MTS, I always appreciate the way that you build the case for both bullish, bearish, and then weigh the options. I suppose that's your legal degree speaking. I've been doing it a lot longer than my law school degree, but yeah, maybe that has something to do with it. As a lawyer, you guys may not understand, but as a lawyer, you definitely don't go in and say, oh, that's just this way and that's all there is to it. You may say that out publicly, but you absolutely have to understand what the other case may be, what the other side of the case may be, because you have to be prepared for the other side to bring it at you, and you've got to be able to defend against it. And heaven forbid you're trying to defend or to represent someone whose case is pretty similar to other cases before, which have already been tried, and you're trying, and always lost. You have to find a unique and novel way of approaching it that the court accepts, that takes you out of that pile of what it's already done. Courts are terrible, guys. In the the respect that it's always based on case history, right? You look at it as a layperson, you go, oh, well, this looks clearly this way. It's definitely illegal or legal or something, right? Rarely will you ever get in front of a judge. The judge may say that, but if you present your case with some different evidence, something that sets it apart from those previous decisions, well, then the court can go, okay, well, let's look at this now. In this case, with these particular circumstances, yes, we ruled this way, but yours is different. Yours has these other circumstances here. So it doesn't mean we're going to agree that you're right, but hey, we'll take a look at it. So yeah, I hadn't thought about that as far as my law degree doing that. But yeah, it's important though, guys, as traders, right? For the same reason, you want to go in there and you don't want to just be completely emotionally, hey, everything is definitely this way. That's all there is to it. We're human beings, guys. We're going to make mistakes, period. If you haven't figured that out yet, what the heck are you doing? That's life, man. That's being a human being. You are going to make mistakes day in and day out. The question is, do you learn from those mistakes, right? Or the other question being, are you so into whatever you think needs to happen that you're not even considering what could go the other way? And so your eggs are all in the basket of, oh, I'm completely right. There's no way I can possibly be wrong. And then you're wrong. And then what happens, right? All your eggs in the basket, all the eggs gone. Somebody dropped the basket. Eggs broken everywhere. And I'll tell you what, today, these eggs are expensive, guys. Right? So, yeah, these are the important things. These are the things that you're not going to get from most people that you're looking to online somewhere, guys. Because I'm going to be honest with you, most of the people online aren't really traders. They aren't really doing this thing, right? They haven't really done this for a living, right? But even with those that have, a lot of them don't understand the why. They don't understand why things are happening. They just understand, okay, well, if it does this, if it does A, then B. And you can do all right with that, but I guarantee you that if you understand the why, you have the chance to be a lot more profitable trader. Because then you start seeing that why developing. And it gives you either support for the idea that A or B is going to happen. And you're not just looking for something to happen, right? It helps you with more conviction so you can place bigger trades on those higher confidence entries, right? Spidey, what's up, man? Spidey Shuffle. What about the rising wedge on the Bitcoin daily? Let's get back to the Bitcoin here. Do I have this one? Let's look at this one, I guess. Bitcoin daily. You know what? Let me make a copy here. Otherwise, I'm going to end up ruining this chart that that our people are using. All right. Daily rising wedge. From where? Do you think this is the rising wedge here? I'm not even sure how you would draw that there. Or are you just doing something silly like this right here? And I don't mean that disrespectfully. I just mean I've seen this type of thing being drawn on there. Where I don't know, you'll have to tell me where you're talking about the wedge beginning and where you're looking at that. I'm not sure how else you might draw it here. Anything like that. I mean, the way I look at this is this right here. Okay. And then, oops. And then, what did I draw? I guess I just did it with this. And kind of this right here. That, that's really kind of the way I look at it. If I was to do something, maybe something more like this, maybe. But even this is kind of iffy. But why a channel based off of here? Because this is sideways. This is a channel. This is a range right here. This is just inefficiency way down, right? This becomes another range over here. Right? So you go from one range to the next, but you're not going to do it from the bottom because you have all this sideways. See? If you can let me know where you're talking about the rising wedge starts from, I'll take a look at it. Is it this? I've seen people do something like this. Is this maybe what you're talking about? Maybe like this. This is not a correct wedge at all. Yeah, you're not going to go from up here. Your wedges start from, if they're going up, right? From, okay, let's say you have a downtrend and you think you've got a rising wedge up. The support starts first. So you would have to start it from down here, right? The idea would be you started from here and then you go from your swing high. Swing low first because the trend is down. Swing low first and then you start at your swing high for the resistance, right? It's not a very good wedge there at all, right? If you're going up, you would start your wedge from the top, right? And then your first low there would signal the support. And you do this for a reason. You do this because of how you're trying to draw it out. I mean, you can't, because you're going from momentum, right? That's what you're going for, right? So if you're looking over here, you can say, okay, well, potentially I've got a wedge up here, right? So what are you doing? You're going up and the wedge goes up. So you're going from your resistance and then your first support down, your first major support, right? So you can draw a wedge like that. You see how clean and nice that looks? That's what your wedge should look like, similar to, that if it's a wedge. If it's an expanding wedge, obviously the other way, but that's where you do that, right? Because you're in an uptrend and your wedge is going up. So you want to start from your swing high because your trend's up, right? You're going to start from your swing high because your trend's up. And then you'll start from your swing low following that. Okay? Here, the trend is down, so you want to start from your swing low and then use your first swing high. See, this is the thing. People don't tell you guys this, right? I'm not sure who Ron Walker is. But see, people don't tell you this stuff, right? You're not out there. People just drawing whatever. They're just drawing lines on a chart, right? But they don't explain to you why you have to draw things a certain way, right? And then you wonder why things don't tend to work out. You're like, oh, it just broke through it or it invalidated or something, But it was never really it to begin with, right? See, this is what I'm talking about. This is why at TWC, this is why we always explain to you the why, guys. So you understand what you're looking at, not just looking for something that may look like it. It's just lines, right? Starting at the 16,000 area. Is that this? I mean, that's kind of this area, so I'm still not even sure how that wedge would be drawn on this. Right? Your wedge should look like a wedge, guys. It should look clean. It should look something similar like this. Right? If you got something that looks all wonky, it's probably not what you think it is. It's probably not a wedge. But yeah, I mean, this 16,000 area, I mean, that's kind of this area here, right? Or are you talking about this one here? But then what are you doing? Because if you're doing it here, well, then you start up here. I mean, what are you trying to say, that this is the wedge right here? Like that? I'm not a big fan of something like that because you've got this huge first wave up into where the other wave starts. Most of the time, this type of stuff just ends up being consolidation sideways in a range before continuing to rally up higher. Another way to know whether you have a wedge or not is if you have a wedge, for instance, right here, right? Usually when the wedge is finished, it's going to give you a steep move. Steep rejection. You see how we kind of build this thing overlapping, and all of a sudden, boom, drops hard? This right here is usually an indication that was a wedge there. Wedges, because think about it, they're consolidating into a small point, right? If you think about a triangle, right? Think about this, guys. If you think about a triangle, just a normal, triangle that we usually talk about, right? What's going on with price? Well, price is coming in here and it's consolidating, right? Right? A, B, C, D, E, right? Before it goes out. Now, what do we usually get out of a triangle? We usually get a thrust, right? And that's because you've consolidated. You've squeezed together all that power and then boom, you let it go when it breaks out, right? It's the same thing happening on the wedge here. You have this consolidation of effort, and finally it breaks out. Boom. Whoops. And you get that big move down, right? So if you see somebody saying they got a wedge and they're not getting some type of strong reaction out of it, it's not a wedge, most likely, right? So many will draw a pattern to fit their narrative. Yeah, they do. I mean, but, you know, that's just kind of being human, right? That's kind of the thing we do. I don't want to knock anybody or, you know, give them a hard time for doing that. But, you know, you guys, if you're serious about learning to trade correctly, right, and learning to do technical analysis correctly, you have to understand these things, right? You have to understand the why. Like what I just taught you right there about wedges. I mean, that's a wedge. That's what happens with a wedge. Just because you can draw, you can put two lines together that maybe look like this, doesn't mean it's a wedge. You know, you do this, and then you get like some price action kind of doing this thing, right? Somewhat more or less, and then it kind of does this and comes out like this, you know. So, you know, something like this. I mean, that's not a wedge. Because you don't have any explosion ever. You don't have this final move out, this big move out after all this compression, after all this consolidation, right? Consolidation leads to expansion, right? You don't have any of that in there. You have what you thought was consolidation, but then it just kind of, you know, just kind of meandered on out of there, right? Didn't really do much. Does that make sense? Bamboo, what's up? Says, Chris, which book is the best to start with Wyckoff? Anything by Wyckoff himself. You can find them on Amazon. They're usually around $5, $7, $9, $15. But yeah, anything by him, the original. There are new books out now which are okay, and they kind of expand on his ideas. But I think if you really want to understand Wyckoffian logic, you got to go to the source. You got to look at how he originally taught it. And you're going to see some of the things they talk about today are things that he never talked about. They're things that people have added on since then. And sometimes people do that so that they can say, oh, look, this is a new and novel way to approach it. This is my thing now. You should buy my book. It's so much better than the original, right? Or my method, right? And so we get that a lot. But I think, you know, yeah, anything by him, if you look up Richard D. Wyckoff there, actually, you know what? Let me see here. Oops. Let me see. All right. I do have some of them listed here, guys. So I've got this general place I keep these books because it's easy to link them over for you. Yeah, we get a couple of cents if you ever buy anything through it, but really, it's Amazon. It's a couple of cents, guys. It's not anything all that expensive. But here's the link right here. And that has direct links to these books. And so down toward the bottom, you might have to hit the show more on the listing there. If you can scroll down toward the bottom of those books, there's books there called How I Trade and Invest in Stocks and Bonds, $7.61, right? Well, at least on my thing it is. The Richard D. Wyckoff Method of Trading in Stocks, Stock Market Technique, number 1 and 2. Those are two different books. My Secrets of Day Trading in Stocks. Those would be the ones. Any of those. You don't have to pick just one, or you know which one do you want to start with. I would suggest that if anybody's serious about Wyckoff, that they read all those, including Studies and Tape Reading. I would probably say that'd probably be the first one. That would probably be the first one to look at. That seems to be a pretty good one. But yeah, I mean, you look at all those, and then also Jesse Livermore's Methods of Trading in Stocks. But you go back, this stuff was written, 100 years ago. And it gives you, and so it's all based on stocks, of course. You might go, oh, but I only trade Bitcoin. Oh, well, shut up. No, seriously. Don't let that dissuade you from actually looking at the books, guys. Because the books themselves talk about market participation and accumulation and distribution and how trading's actually done, right? I would say read those books before ever you look at anything else online, all the free information online. I wouldn't even look at the free information online. A lot of that free information is, again, a lot of the embellished stuff, right? More stuff added into it, stuff that Wyckoff didn't originally use. And I'm not saying it's all terrible or anything, but man, oh man, If you don't understand the original, you might get suckered into a few of these not so genuine places online that don't exactly give you the correct information. So yeah. Yeah, definitely look any of those books. Like I said, I think if I had to pick one, probably Studies in Tape Reading. It says it's $9.80 on my list there. But I would start there and then move with those other ones. They're all down at the bottom there. I would do all those before you even look at Jack Hudson has a book called Charting the Stock Market, the Wyckoff Method. David Weiss has a book called Trades About to Happen, a modern adaptation of Wyckoff Method. I would look at those two after you read those other books. And I would say read all those Wyckoff books. Read all those Richard Wyckoff books, the originals. They're short, guys. They're short. I know everybody's got short attention spans today. But yeah, I would read those. And then I would go on to one of those other books that I just mentioned there. Because those are going to expand on what he did. But if you don't really, truly understand what he's doing, the other one's not going to be a whole lot extra help. It's just going to give you more stuff. Right? Crypto MTS says Socionomic really changed my idea on a lot of different topics. Socionomic Theory of Finance. Oh, yeah, that's an amazing book. Yeah, like I said, guys, the reason why I pushed that so much is because that was the thing. I told you guys this, right? So me doing this, I didn't come into that book until almost 2020, right? So 20 years of me doing what I'm doing, right? 25 years of me doing what I'm doing. And the thing that really got me about that book was, oh my God, it was talking about everything the way that I had finally come to understand the market after a few decades. If I had had that book and an open mind when I first started trading, I would probably be so much further ahead than I am right now. Not that I'm doing bad, but man, just having that understanding. And so for me, to you guys, I think that's one of the best investments you can make. But it's 800 pages long, guys. It tends to be a pretty easy read. I think so. Everybody else has said so as well. But if you're going to get it, you need to read it. Because as Crypto MTS said there, it has the potential to really change the way you view it all. And for me, that view has been very profitable. So, but you don't have to spend 20 years trying to figure it out like I did. You can start with the nuts and bolts right there. But you have to have an open mind. You have to be willing to accept that social mood decides something. It kind of has a mood. It has a feeling, right? It has an emotion. And that leads to what you see in the charts. It's not the charts do this and then people do something else. That's why I always tell you the information, the news is in the charts. It doesn't mean that we knew that at 3 o'clock today, some tanker was going to explode somewhere, blah, blah, blah. We don't know exactly what's going to happen, but we know that general mood is being transferred into the general mood of society is being transferred into the charts. And we know that they get overextended and they do things, right? So as human beings, our emotions lead us to make decisions, right? And so in the aggregate, if we're all starting to feel kind of down, right, we're not going to be buying as much. If you're a business owner, you're going to pull back. You're going to fire people. You're going to slow down production, right? If you're doing that, your numbers are going to come in lower, right? People are going to stop buying your stock, right? The upstream, right? The materials you use to make stuff are all of a sudden going to start dropping, right? Because you don't have everybody going after it as much, right? So yeah, I would think that would be the number one book. I always tell everybody, if there's one book you should read, no matter how you want to trade the market, whether it's Elliott Wave or Wyckoff or price action or whatever the flavor of the week is, I think if you read that book, it'll set you up for success in however you're doing it. So yeah. What's up, LXT? Good to see you, man. Crypto MTS says, the open mind is essential. Most everyone that I share the ideas with immediately shut it down. They do, unfortunately, right? And it is unfortunate, but it is kind of the way things are, right? That's kind of just the way, we are as human beings, right? We tend to be very closed-minded, whether it's politics, sex, religion, whatever, right? Trading. And most people who come in have very little knowledge of markets or macroeconomics or global finance or politics, real actionable information, understanding, right? And yet they're closed-minded about a subject matter in which they really don't know anything about. How much sense does that make, right? I'm trying to get you guys not to be that way. It doesn't do anything for me whether you're that way or not. This is for you. These are things that I had to overcome. I wasn't always believing things the way I believe today. It's taken decades to do it. But here I am, and I'm here to tell you that if you let it happen, if you get to that point, if you make it happen to where you get away from the way that you generally tend to think and you start doing these things that I'm talking about, life, trading, everything becomes so much better. It really does. Yeah, except that you find yourself really irritated with people who play the victim in any area of life. That's going to be the drawback. You're gonna have a lot of frustration with those who choose to remain closed-minded, right? To think that they think they know what's going on. But yeah. By the way, guys, notice this right here. All we've done here, everybody's like so worried about this topic, right? But look at all we've done. We rallied up to resistance, right? What have we done here? To resistance. Pull back to support. That's all we've done so far. And guess what? If we drop down again, guess what? Support again. And I can draw this from all the way back. I can keep drawing this all the way back here, right? But you guys see that. Look. Right there, right? Support, support, resistance, 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 support, right? I mean, so if you're up here screaming 12,000 or 10,000 or something, and you don't recognize this, I mean, what are you doing, right? And even with that, guess what, guys? You still have this down here. You still have this that you have to get through. Now, none of this means that we can't get through all this, but there are things you have to get through before you even start thinking about 12,000 or 10,000 or something, especially after a rally that so far has returned over 60%, within that, 90 days or so, right? In 3 months. And it wasn't just straight up. It was sideways here, right? It was sideways here for half those days. Half these days on this rally up, we've been sideways, guys, or more than half the days. And if we really look at the range, which is here, when I said slight dip there, 63 days of whatever it's been, 100 days, right? Over 60% of the time was spent building a low down here. It wasn't any kind of like V bottom, right? This is months sideways before we actually broke out and head higher. And now here, I mean, really, you just, this area here, you had very few days of upward movement here. The rest of it's basically been this sideways, right? I mean, even if you just wanted to grab here from this swing high to where we are right now, right? And we look at this whole thing and we can say, okay, well, over the course of 111 days, we spent 63 days sideways, and then we spent another 26 days. So that's basically 90 days out of 110 we've gone sideways, right? But it's not really, because really, even though we had these little higher highs, I mean, ultimately, this has been sideways here. So it's been 38 and 63. 101 days out of 110 have been sideways, mostly, guys. It's very few days actually been straight up. Right? Does that make sense? So we'll see what happens. But, again, I think there's a lot of going on here to suggest that even if we get a pullback, it's just going to be just a pullback that the bottom's likely in, right? We've almost got hidden bullish or bullish divergence here on the daily. No, wait. No, we don't. I have higher lows here. Yeah, I got higher lows there, so nothing going on there. But yeah, everything else definitely looking kind of interesting. So You know, again, everything just looks like a pullback right now. That can change, guys. That can change. We can get a new low, sure. I can't promise you it's not going to happen. But I would be an idiot to sit up here and scream that it has to go lower. That just doesn't make any sense, that it has to, right? That's more an emotional bias than it is actual technical analysis, right? Because we've got these technical levels here that we've got to get through. All right, guys. Listen, I'm going to go ahead and get out of here. See if there's anything else I want to show you real quick. Yeah, we talked about Ethereum. We talked about NASDAQ. We talked about Bitcoin. Talked about the BLX, which I think is interesting. Coin. We can look at Coin real quick. Look at Coin right here. Coin's having a really good day right now. So this is just a bunch of overlap here. So it looks like an ABC. So it looks like a WXY. So if I look at this, I mean, I think you at least look at 7670 area. That would give you, an ABC. But I think if this is a pullback's complete here, this is 1, this is 2. Well, 3 is up here at 88.88. 5 is up here at 96.41. Off that. Potentially there, right? Now, locally, I don't know. Locally, it looks like maybe a 1, 2, 3 here, right? So you would expect to get rejected, most likely, probably right around that $71 area, $70.50 to $71 area, I think. Get like a 1, 2, 3, 4, 5. But, that would just be 1, 2 then. Look for a pullback. Yeah, 50% right here at 63.75 or so. So you can see something like a 1, 2 maybe. 50% 63.73. 61.8 is 62.82 or so. And then, we look 3, 4, 5. If we can hit that up there. I almost got that pretty spot on there. And so as you can see here, doing this right here, this gives us a 5 around $91.30. The wave 3 over here was $88.88. So it gets us just a little bit of a push beyond that. So I think we'll probably look at something like that. 1, 2, and then 1, 2, 3, 4, 5 gives us 3. We'll get 4. We'll get 5 up here above $97, $98. Pretty close to 100. It may try to push to 100 just because, psychological round, tens number. But yeah, I think it looks like Coin's got some room up. And if Coin's going to go up, then Bitcoin should also likely rally as well. But we'll see. We'll see if we can get that. But I think there's a good case potentially brewing for that. You can see here on the daily, we've crossed bullishly. We're threatening to break out of oversold on Stochh RSI. Maybe hidden bullish divergence here on the daily. Yeah. We've got hidden bullish divergence on the daily as well. So, yeah, coins look good. So if coins looking good, I tell you guys, look up HUT, look up Riot, look up Mara, probably look up NVIDIA, things like that, crypto-related stocks, and see if they're also rallying up. They should likely be rallying up with it as well. Make sense? FTM, further upside, I believe. Excelsior, good to see you, man. Yeah, I don't think FTM's done yet. It looks like it's still got further upside. I might post a chart there on Twitter here sometime today if I get a chance. Update the chart that I've got there. All right, guys, let me get out of here. As always, remember the only thing you control in the market is how much you lose. So please keep working on risk management. Like I said, I think Fibbo and I will be doing every other Friday. He'll be on there, so you can kind of mark that in your calendars if you like that. And I'll look at potentially bringing on some other people, some other traders maybe you guys like to see and whatnot. And, I'll continue to stumble over it and look silly until I get good at it, right? It is what it is. All right, guys. Hey, listen, I hope you guys have an amazing week. Trade safe. And if you're in Discord, I'll see you guys there a bit later, okay? Y'all don't forget to subscribe to YouTube. All right? My YouTube channel, my Twitch channel, wherever you're on. Don't forget to follow me on Twitter, TX West Capital. And like the videos. All right, guys. Y'all take care.